Good morning, folks. We are live. Happy Monday morning. Let's see what we can put together here today. So as far as news to kick off the stream, we got to cover business first, right? We're actually pretty clear here today as far as news is concerned. We have Trump meeting with the president of El Salvador. Feds Barkin is speaking. Sorry, that's at 10 a.m. Central. Feds Barkin is speaking at 11. Feds Waller at noon. That's about it. It's really it here today. So we got a clear news day. Good morning, guys. Mondays are oftentimes, by the way, Mondays and Fridays are often slow news days. A lot of news gets released Tuesday, Wednesday, Thursday. So, all right, let's see what we can do here today. We got market open here in 5 minutes sharp, and we have a move upside into the open is really what we're getting here. So let's see if this holds. We look at the daily chart on the bottom, by the way. I mean, look at that move up out of the hole. Just last week, we were testing downside in the 16s. This is just the New York session. I think we actually tested low 16s is the lowest we ended up getting. And here we are driving up out of the hole. Obviously, this doesn't even represent because New York hasn't opened yet. It will, though, a few minutes. And this will update up to the low 19s. We do have a top here that I want to keep an eye on, right around 260. So maybe 19 and a quarter, we'll keep an eye on there. And then clearing 19.4. Maybe it's off to the races to 20K. We'll see what ends up happening there. But either way, how you guys doing this morning? Chris, good morning. Starbuck, good morning. Rightish, John, Eric, what's up? Welcome back. Peter, Christian, Keith, Scrumptious. It's always the same names. I love it. Skeeto, Scooby, John, how you guys doing? Good morning, guys. Hope you had a good weekend. Hope you rested up. We have work to do here today. Exposed, Zachary, Steven, Gibbs, Steam, Whitewater, Joe, Mitz. Every day I recognize Quicksilver, welcome back. You gonna take some big short here today? I don't know, man. We're up 2.3. Here so far. For those of you guys that don't know, Quicksilver was catching just about every big downside move in the chat. 1,000-point trades on the daily. All right, we got opening bell here in 3 minutes. Gonna let this market really determine what it wants to do here. Again, I'm always thinking, or we should really look at the daily. I'm always trying to get the story of the market, okay? So what I'm looking here is, what's the market inertia like? And really, it's been a lot of range-bound trend days as of late. So I'll see if like big wide ranges that kind of act like multiple intraday trends. Now, usually you get one or the other, but we've been seeing a mix lately just because of the elevated volatility, which is cool. So I'm kind of thinking maybe we'll see that again today, but we have to do what the market tells us. But as far as market inertia, that's what we've been getting. So we'll see if we get that here. And we are really getting a push here. Remember, we're coming in now to that top of the previous bar, right around 260, or at least the close of New York. Well, 250 really. The close of New York right in this region. It's going to be a range. The actual close was 244 here on this day. But again, you have that wick upside here to 386. So really, this is a range from 250 to 4. So 19,250 to 19,4. Again, above 19,4, it's really anyone's game. We could see a push up toward 20K. That actually wouldn't surprise me too much here today if we don't get too much tariff talk. But again, I'm not in the business of saying, oh, I think it's going to go up today, let me buy. We got to let the market tell us what it wants to do here and then trade the reaction. All right, so we'll see what we get. Rufio, good morning. How you doing? All right, 50 seconds out here from the bell. See what kind of volatility we get. Again, if you're just joining us, As far as news is concerned today, pretty slow news day. We have a couple of Fed speakers. We might get a Trump headline or two at his from his 10 o'clock central meeting. That's really about it. Fed speaker at 11, Fed speaker at noon. That's really it. All right, again, gonna let these institutional orders clear. Getting a little bit of a pullback here into the open. Some NVIDIA movement. Right off the opening bell, gonna be a lot of institutional orders. I gotta let those clear. Those are not intraday mentality ideas. There's the bell. Usually those orders that trigger on the open, a lot of times it's just a week, 3 weeks, 2 months out mentality. It's very difficult to have any kind of edge trading the open unless it's extremely news driven and the reaction to the news is relatively, it can't be so obvious, right? A lot of people don't understand, like if the news reaction is so obvious, like everyone knows, then it's already priced in. Okay, so if you get news, let's just say for example, 30 minutes before the market opens and the market's pumping into the open, it's really tough to say, well, I'm just going to buy the open because it's for sure going to go up because everyone knows this is great news. Well, if everyone knows it was priced in 25 minutes ago, right? Now it's just momentum taking hold. So obviously that's not the case here. So we'll see what we get here as far as institutional orders. Bit of an NVIDIA move here, kind of dumping off here into the open a couple of points. Good morning, Brandon. How you doing? All right, coming into the 20 on the 2 minute here. There's the test, 20 EMA that is on the 2. 20 on the 5, by the way, is down right around 176. So 30-ish points away. Keep an eye on the NVIDIA movement here. NVIDIA is still pulling back. Obviously, that's going to have some kind of effect. Tesla, a few points upside here. See, Tesla's moving. NVIDIA's trying to bounce here. We'll see if it can. Obviously, that all comes into play here when looking at the Nasdaq. All right, so that 19.2, that's going to be a tier 3 level, so really no big deal out of 4 tiers, right? Really what I'm watching here is the 20 EMAs on the 2 and the 5. You know, again, they're not extraordinarily relevant, but they're relevant enough where the market tends to test them and see them. You can tell that the market knows they're there. And it oftentimes will pull in, like you see, it'll justify a break of the 20 on the 2 in order to test the 20 on the 5 if they're reasonably close enough compared to the current volatility. We're seeing that now here, coming in for a test of the 20 on the 5-minute chart, top left of your screen. Again, range that I'm watching upside right now, for those of you who are kind of just joining us here. On the daily chart, we have a range at the top of this big bull bar. Represents one New York session, 1 day of trading. We have a range from 250 to 19.4. So 19,250 to 19.4. Above 19.4, you know, you're really looking at, there's not really a whole hell of a lot in the way at that point. We might see the market try to make a move up to 19.5. I mean, who knows? Maybe we end up seeing 20K. But there, you know, tariff news could end up dumping at any time. Or hitting the market, I should say, at any time. Just gotta let these first few bars off the open clear, coming into 8:35 here. Give the market maybe 5 2-minute bars, and then we'll start looking for setups. So you can see the market held on the 5-minute chart there. Trying to hold at least the 20. See if it can. Big old push downside off the open. We're already down 100 points. Now, as far as stop hunting, and we're giving that up. Look at this. We're taking that lower. As far as stop hunting, remember, pre-market levels are going to hold a little bit less weight because you have just less volume, right? Less traders placing stops based on levels that happen in pre-market. So the most effective stop hunting is going to come from low and high of day and really like the top and bottom. If you put in a top and bottom, you don't just range through the whole 15-minute opening range. But if you put in a top and bottom in the 15-minute opening range, or you know, the 30-minute opening range or whatever, those tend to have a whole hell of a lot of stops because you have traders looking for reversals. So if you have shorts, you know, this is a good example here. Everyone's short right now. I mean, where do you think most of their stops are? They all just place them in the suckers spot. So you see a bull reversal and a test upside through here, you know, that's good for maybe a 15-20 point push through just based on the volatility of the stop loss sitting there alone, or the liquidity, I should say, of the stop sitting there alone. But these bears are taking it lower, so we'll see if we even get a test of that. What's up, Worthy? Appreciate you. Good weekend. Yeah, I hope you guys had a good weekend as well. Yeah, Zachary, we'll see what the volatility ends up like. If it ends up in that like 40 to 70 range on the ATR, I'm going to stick with 40-40 on the reward to risk point-wise. If we have to make an adjustment, I'll let you guys know. What's up, DNA? Welcome back. New week. You guys can see we're getting some nice growing bear bars here on the 2-minute. Still too early for me. This is still a lot of big institutional volatility. All right, 19.1, that's a tier 3 level. Testing that area. Now we're talking about that 250 to 400 range up top, right? I mean, worth mentioning, we also have a kind of a level down here. Right around 18.9, just a break through 19, really, down toward 18.9. It's kind of that region. So we have areas to watch. Now, I'm not saying like, oh, it's a gap, it has to fill. I think that's a ridiculous mentality. You know, gaps tend to fill over time, but the day after, taking a trade based on that is kind of a sucker's bet, I think. So we have a bull case, we have a bear case, we have liquidity zones for both. Let's see where the market takes it here. After all those institutional, maybe profit-taking orders off the open here, coming into a new week, looking to maybe reposition some capital. We got big drive out of the hole. So after all that, we'll see where the market takes it here. Just need these orders to clear, and then traders can step in a little bit more percentage-wise compared to the volume. Still the minority traders are going to be, right? But get that percentage up to maybe 25-30% of volume coming from actual traders with some kind of intraday mentality. That helps us out. Get an edge, right? Still pushing downside. Watching this region here, that pre-market level, there's going to be some stops. It's a pre-market level. It's not going to be loaded, but I know there's some bulls buying this dip. Like, well, this is the obvious spot, right? So you're going to have stops in this region. If you see a breakdown side of 1906, sorry, like 1960, maybe good for a 10-point continuation downside just based on their liquidity alone. Those sell orders sitting there. All right, here's the test of that low. You guys see that? Look at that. There we go. There's your 10-point move. You see that quick wick? Right? You can see it better here on the 5. You get that quick test and then a wick. Those are those stops triggering. It's just a chain reaction. It happens so consistently. I mean, think about it. There's a bunch of orders sitting here. Again, not nearly as much as if that was like the aftermarket open low. But bulls buying this dip are like, well, I got to put my stop somewhere. Might as well put it here or maybe here or maybe here. There's going to be quite a few, right? And those are sell orders. Market sell orders. So they just aggressively get taken out kind of all at once. They feed on themselves. That's pushing momentum here. Over a 200-point move now since that high coming into the open. And here's 19,000. That's going to be a tier 1 level. Coming in for a test. Again, not to mention, we do have this low here. We just talked about that, right? A bunch of stops are going to be loaded up here. Not nearly as much as intraday, right? But it's a pre-market level, and that's pretty much the obvious spot for aggressive bulls, giving this a lot of room. I mean, a breakdown side of there. 25 points puts you into a test of 19. We might just see that. Let's see if we do. There we go. See if we get a breakdown side through 19. Now, some of you guys probably wondering about Friday. So I got off the stream at... I took one trade. Friday was kind of a slow day. Slow morning, if you remember. There's the push. See if we get a test of 19. Coming in. So Friday, slow morning. Got one trade on stream. We left up like $1,500. In the afternoon, then I went and I like ate lunch, came back. And there you go. There's the attempted break at 19. I came back. I traded like, I think one Apex funded and one Take Profit Pro. It's just small. I took like 2 scalps, added like $200 and left. So I finished Friday up 1,700. It was fine. That was a good way to end the week. Well, there you go. Bulls stepping in for that bounce right at 19. You see how that works? That's just so interesting. You see this test here. Here, I'll pull up the 5-minute bigger. Like we talked about, right? Maybe 24, 25 points on a break downside of this low to see a test of 19, and we get exactly that. You get stops triggering. Okay, we're close enough. Momentum, might as well sell into 19. You see an attempted break of 19, and then once you get that break, then it's like, okay, now we need some kind of confirmation because the bulls step in and try to take it higher, and here we go. Nearly a 100-point move out of the hole. Well, we're into 845 territory, so it's time to start looking for setups. Yeah, that average true range, thank you, Eric, for pointing that out, is sitting at 40 right now. As more bars come in, just a couple of more, and then we'll get the full 20 minutes in average of 10 2-minute bars, right? Because otherwise you're averaging in pre-market bars. It looks smaller than it really is. But that's sitting right now at 45. Obviously, that last bar is going to take that up a little bit from 40. But 45 ATR, that's good. That's good. 2 weeks ago, 3 weeks ago, we were seeing like 12 ATRs after 45 minutes into the open, which was a disaster. I mean, we were able to walk away with small base hit green days. But, you know, there are easier days to trade and there are more frustrating days to trade. And those were definitely more frustrating when you just have no volatility. Last week, though, was very, very volatile. And I know a lot of people were having trouble. I myself had a glitch or two just based on the crazy volatility. And that isn't the easiest to trade either. It's a little... I like when it's volatile but smooth. That 30 to 70 range region on a 2-minute bar is fantastic. I'll take that all day. And here we are right in that range. So here's a retest of 19, very common. See the bulls try to bounce it up out of the hole. Bears take it down for another test. They're like, well, hang on, we didn't really get a fair test there. See if they can hold that below 19. Those 12 ATR days 3 weeks ago were brutal. I remember the Monday and Tuesday of that first week of you streaming, it was like paint drying. Yeah, man, the chart, it was just barely moving. So we need some kind of range on these bars, but when it gets crazy, like tariff talk last week, a lot of people get hurt. But listen, in those scenarios, you got to be willing to, if you need to, widen out. I probably could have benefited from widening out even from 40 and 40. 40-point stops, 40-point take profits last week. Worked my way through. I stuck with 40 and 40. In hindsight, I probably could have gone 60-60. Just as far as keeping my risk per account similar, that would have been a little more. The 40-40 was just a little cleaner to make the numbers work. Eric, last week ATR was insane. We were seeing 400-point bars. It was crazy. I couldn't take more than 1 micro the whole week. Yeah, listen, I think 1 micro is not a bad idea. Even in regular elevated volatility. A lot of people would benefit from just trading smaller and scaling this horizontally rather than trying to go vertical and make, 4,000 per account per day. You're just pushing the line too hard on the stats of like a normal drawdown. All right, market trying to make a decision here between 18,900 and 19,100. I have a feeling we're gonna make a decision and either push down in a bear trend below 19, or the bulls are gonna be able to bounce out of this, and we're gonna see an ascending channel up out of the hole of 19. So we'll see which one the market here decides, develops into, and then I'll start taking a few trades. Lee, last week the 1,700 point move or something on fake news one day. Yes, we had 1,100 points in less than 10 minutes, and then once it came out that the news was fake, market dropped like, I don't know, I think it was like 700 points to 1,000 points in maybe 6 or 7 minutes. All right, here we go. Bulls trying to take it up through 19.8 up toward 1980 up toward 19,100. See if they can. Again, I'm watching for either ascending or descending channels, the proper size that I can take little reversion scalps, or just a continuation trend. We'll see what we get. Yeah, listen, that fake news last week, that was, if you ask me, I don't know. But that seemed highly engineered. I would think it's very unlikely that wasn't highly engineered. Somebody made a lot of money. A big, big play. And nothing will probably be done about it. Nope, as far as news, again, if you're just joining us, we're pretty clean on news here. Maybe some Trump headlines around 10 Central. Maybe, we'll see. Fed speaker at 11, Fed speaker at noon. If you guys wouldn't mind, press like on the stream. I appreciate it. It's all I ask. It really does help out tremendously. This looks to me like the market's attempting to form a little ascending channel here. We'll see if it can. I'll trade that happily if we get enough touch points. Looking for 3 minimum on the ascending support. Flippity plop. Appreciate you. Thank you. Thank you. Yeah, here every day, 8:15. So last week, if you guys remember, we were getting a whole lot of bigwigs making very negative statements. A lot of the Fed members seemingly very anti-Trump tariff plan. That negativity, by the way. Oh, Jamie Dimon as well. That negativity, by the way, those headlines tend to lose steam very quickly. Because the market starts to realize, like, okay, this is just the narrative. And then people stop really paying too much attention to those. Like, as you get more Fed speakers coming out saying the same thing. This happened in 2022. It's just a cycle. Like, we had Fed speakers coming out in 2022 saying, oh, inflation is going to be here for years, blah, blah, blah. And the more they said it, the less effect it had. The same thing is going to happen with tariffs, by the way. The volatility per headline will start to slow. But at this point, when you get negativity from Fed speakers, from bank CEOs about tariffs, as the weeks go on, you guys will notice that when you see a bad headline from a speaker, the volatility will be less. Hey, Worthy, that is on the bottom. He's asking what's that thing on the bottom? That is, so the blue flag, the blue line, that's the average true range, which is the average range of the last 10 2-minute bars. And then the yellow bars, vertical bars with the yellow flag, that is the range of each individual bar. So all I'm doing is comparing the current volatility with the average volatility of the last 20 minutes. Which tells me if a bar is undersized, outsized, which helps especially on, well, I guess on both range and continuation entries. Because if a bar is majorly outsized, what happens is for continuation, you really start tempting that rubber band snapback effect that my rubber band Reaper setup is completely built on. And I'm not going to go against that, if that makes sense. So for continuation, I'm really looking for controlled growing bars, closing near the high. I don't want just some, we're seeing like a 50 ATR. I don't want a 120 point bar and then I'm buying, because clearly something happened. It's a news headline, it changes the edge. And now you have a bunch of bears salivating at the idea of, oh my God, look at this reversal. So it has to be controlled, and I use that to pay attention to that. Just gives it a number rather than just the visual, which I need the number. All right, well, I think rather than drawing this like this, that's very aggressive. I tend to go the more conservative trendline route, which also gives me more room. That would give me a lower entry, right? If this were to end up playing out, rather than going like really aggressive, this would give me a better entry. Less entries over time, because you're asking for a deeper test. But I would draw this just about like that. So that's 2 touch points, really. I would call this 1. 2. We're coming in to see if we get a third. If we get a third with a nice strong drive out of the hole into that 20 or past it, ideally, all of a sudden that becomes a channel that I'm interested in trading. Yes, Worthy. Exactly. Basically true price action. It's the realest you can get. Nico, I started studying volume profiling over the weekend. It's pretty interesting to read about. Listen, depending on what you mean, most people when they say volume profiling, it's very similar to like my stop hunting strategy that I add into a regular like continuation setup. It's just finding the liquidity, figuring out what kind of orders they're going to be, and then adding that into an idea to try to improve the edge. Very similar. Okay, here we are coming in for a third test. Obviously, top right of your screen is that 2-minute chart with the trend line. I'm really watching there. Let's see if we get a nice clean bounce out of the hole or if the bears are able to take it lower. This third touch point is really my moment of truth. By the way, here's what we're going to be trading today. We trade in those accounts. I think, what is that, 7? Yeah, we'll be trading 7 Apex funded. We'll do 2 take profit pros. You can see the size there. The ratios on the size for each account. That's what we'll be doing here today, as soon as market gives us some. Okay, there is the hard third test. See if the bears are able to take that lower. If they can, actually, all of a sudden, guess what? I become very interested. This would arguably be a better setup for me. But I'll just take what the market gives me. If we can get a rollover here and a push, and then a rollover and a push, and a close at the low, right in this region, guess what that becomes? A continuation stop hunting setup, like we just talked about. But I'm cool either way. Let's see what we get. Hey, Christopher, welcome back. Appreciate you. Are you waiting for longs? I am waiting for whatever the market gives me here. Either continuation downside, stop hunt that bottom just below 19, or this channel. But this channel is really breaking here. It's getting sloppy. So I'm going to go ahead and delete this. That was just in a test line, right? And we'll see what the market really develops here. We will see if we see that 20 on the 2 minute? It's actually better if I show you this way. We're testing it now, very early stages, but we'll see if we end up seeing some kind of slightly descending trend line. Also with that 20, what we got a lot of last week, actually, well, not a lot, at least a few. We made some money on ascending support levels and descending resistance levels with the 20 EMA on the 2 minute aligning with those levels, which creates kind of like a channel, but really a one-sided channel with 3 touch points. And we'll see if we can get some kind of development here. We're seeing a push. The bulls are trying to take it higher. All right, roll over on this 2 minute coming here in 15 seconds. There's a big bull bar. Any headlines? No, I'm not seeing anything quite yet. It's going to be an over 100 point range, 102 point range there on that bar. By the way, that just came into the 20 on the 5 minute. Okay, worth paying attention to there. So I'm now, of course, watching if we can get some kind of clean bull continuation setup. That last big outsized bar, you know, it kind of throws a monkey wrench, no pun intended, into things. Because you get a really, really big first or second bar on a continuation setup. Now the third bar really has to be a shrinking bar, which shows weakness in comparison for a continuation setup, which isn't great. I will still take it, but I do know that the edge is slightly lower on a setup like that. Because you have a lot of momentum that is starting to fade, so you're kind of buying fading momentum as opposed to strengthening momentum. All right, 30 seconds left on this 2-minute bar. Take a look here. We'll let this next bar here develop and see what we get. Again, you see in comparison, weakening momentum. And really, not a lot of levels to stop on here. So I prefer to see this third bar, I'd call it. Okay, so we're sitting right around that 20 EMA on the 5 minute, obviously a point of semi-interest, right? So kind of have to pay attention to it. Coming back in here for a test of the 20 on the 2. Now, obviously, this ended up happening to be a good kind of like teaching example, but you see this 2-minute chart, big bull bar, weakening bull bar. Do I buy the rollover? I mean, this is a large bull bar, but in comparison, we're seeing strength diminish, right? So you get a pullback. Now, of course, sometimes you will see maybe a third smaller shrinking bull bar up into maybe 19.2. But I'm really going for 40 points. So I had to hold off. Testing the 20 on the 5 as we speak, potentially coming in for a retest of the 20 on the 2. There you go. Here's the retest of the 20 on the 2. There's the test. I'm gonna let that work itself out. I will be back in 2 minutes. We'll see if we get some kind of setup here. All right, we are back here. Gonna let this next bar develop. Let's see what we get after that break downside through the 20 EMA on the 2. By the way, guys, listen, if you want daily payouts from a prop, take profit is currently, use code BIG, it's on screen, 30% off, and here's the big one, no activation fee. That's the kicker. The headline here is not 30% off. No activation fee is a really big deal, because what you pay for the test, when you pass it, you don't have to pay any more money, you're just in. And then you can take daily payouts as you get there. Money's in your account same day. Really is a beautiful setup at Take Profit. All right, here's the retest of the 20 on the 2. We're getting a lot of retests here. We're really sticking to that 20 on the 2, aren't we here? All right, time to draw something. Ready? 2-minute chart. I would probably draw it just about like that. Okay, now is it perfect? No, but don't overthink it. Just draw it how everyone's gonna see it. That's the only reason this matters to begin with. Trend lines aren't magic. They're just self-fulfilling prophecies, okay? Now you could draw an upside level as well, but since this might end up being an ascending channel, I really only care about the ascending support. It's a higher probability trade. Remember, if you're going to be trading continuation, you want to keep an eye on this, because if you're trading continuation up here, like let's say you get massive bull bars, you enter long up here. Well, guess what? You're entering long kind of right into where a lot of people are going to be like, oh, that's a trend line. So if I'm going to trade continuation inside of a channel, I want it to be like here or here. Give me room before any bear thinks, oh, that's an ascending resistance level. Okay, but here we are getting bears trying to push downside through that trend line. Obviously, you know, that we didn't really get a true bounce out of the hole on that third test. But just to be a real test, I would need to see this push upside well past any kind of profit target, not just see a weak bounce and then a retest. We talked about that a lot, I think, 2 weeks ago. All right, let's see if we get a nice little clean setup heading into continuation territory. The downside, or if we end up seeing a retest. There's the retest of that trend line. You see that here? Very common, especially in an indecisive market. Here's the second bar, pushing a little bit lower. Roll over here in 15 seconds. Fear and Greed Index just came in. It's 20 out of 100. Still in extreme fear territory. Not that I can do anything with that information, but it's interesting to watch. All right, here's the rollover of this bar. Good close. It's a little bit of a shrinking bear bar, but now a lot of everything lies on this bar here. If we can get a nice push downside, maybe 40, 50 points, and a close in this region here, boom. I'm entering short for a push down through 19. Well, there you go. There's another retest here. See that? You guys kind of see what I'm looking at now, right? I'm gonna remove this, just clean everything up. This to me is starting to look like a flat bottom, which probability-wise has a higher probability of breaking. Now, you could make the argument that we're also seeing this. That's so aggressive. I just don't know. We'll see if we end up seeing that play out. In which case, if that does play out, we get a nice rejection here into that level and we bounce. We'll probably reject off here and just break downside through there. But these flat bottoms just, especially lately in the Nasdaq, they just tend to tempt break too much. Flat levels on the Nasdaq are just notoriously unreliable. All right, well, here's really the test of that. If that is a descending resistance, we'll see. I'd really prefer the bulls to just take it higher here. Give me some kind of continuation setup. ATR currently sitting at 51, by the way, which is that's a healthy ATR for this time of day. It's a good place to sit. We're just missing the right action here. All right, 50 seconds left on this 2-minute bar. You see that mushy rejection? Bulls are really defending that little flat bottom. This is that time of day where it's just is where most people struggle. There's nothing here for me at this very second. That can change in 2 bars. And it will here. But right now, you just gotta take it easy. All right, here we go. Bull's trying to push us up out of this little channel. It's not even really a well-developed channel. What I'm really watching is this little region here. If the bulls can take it higher through there, which they just tested. See if we can get a nice controlled close on this bar. 60 seconds out from the rollover of that bar. And then this region becomes highly of interest. Right now, we're testing the 20 EMA on the 5-minute, which has been of interest for the market here today. Gary, we're trading futures, Nasdaq live. Nico, how are you liking the new trade copier in comparison to Replicanto? The functionality of it seems very similar. The risk management features and the ease of use, I would say, of this new one, I think I like better. So I think at this point, I'm going to stick with the new one from Affordable Indicators. All right, there we go. We got a nice push. A lot relies on this bar for me. 1:50 out here from the close, the rollover of this bar. Hey, Gary, just give them a call, and they should be able to get you set up. Hey, Danny, good morning. What's up, brother? All right, we're 1:30 out from the rollover here of this 2-minute bar. I just want this bar to grow. I know I sound picky, but I need it to grow a little bit, not be so outsized. It's a reasonable ask, right? And give me a nice close near the high. 1:10 out here from the close of this 2-minute. Get the copy trader connected, all set. $55 seconds. Bears weaken us back down. Come on, we got 25 seconds to clean this up. Just a reminder, we are currently kind of testing, or getting through, but still kind of testing that 20 EMA on the 5. I need to see a nice definitive closure out of the bulls in the next 12 seconds. Be ready just in case. There's the rollover. Gotta hold off. Big wick downside from the sellers. See that? I mean, it's shrinking momentum, right? Fading momentum. Big bull bar. Smaller bull bar. Wick down, arguably doji bull bar. That's the beginning of a potential reversal sequence that the bears are attempting to begin. I can't step ahead of that. Okay, retest of the 20 EMA on the 5. Market just won't let this level go here. You see the bears though, they're again, that reversal sequence, that's not just, we're not reading tarot cards here. That's real price action. You see the bars are shrinking, momentum is you know, sellers maybe stepping in, buyers potentially stepping out. New headline out of Deutsche. Deutsche now expects the Fed to deliver a 25 basis point interest rate cut in December. Previously, they were saying no cuts in 2025. That just hit. Uh-oh, the wife's in the chat. Alright, the Bulls are trying to hang on to this little continuation sequence. Let's see if they can give me something. What's up, Brian? Good morning. Alright, well, when you see these bars turn into dojis like we're seeing, one side or the other ends up getting disappointed. Happens every time, of course. And then they tend to slowly start to step out of the way. Bulls managing to grow this bar a little bit. 30 seconds out from this close. Alright, so got 10 seconds here. See this 2-minute? Wicking back a little bit below that previous. I'll go ahead and get long on that rollover on the retest of the previous bar's wick. Okay, so we are sitting long now. Stop down at 19,110 3/4. Take profit up at 19,190 3/4. Getting a bit of a pullback here. Seeing a little bit in the red, about 10 points in the red on the trade currently. We'll see if we can get a push up through. Now, the take profit really is about a 10-point push through this high. So I'm also stop hunting on this trade. That's part of the idea. But 20 points in the red here. He's getting a pullback to that 20 EMA. Stop is just below where that 20 EMA is sitting. So I'm fine where I sit. That entry was just fine for me. We'll see how if it ends up working out and turning around. Heading down toward our stop at 19,110. Again, that's a 40-point stop from entry. We're currently 15 points in the red. Break even on the trade now. $10 in the money. Need to see a little continuation, a little break out of this little channel. It's really not a channel, which is why I'm cool fighting it. DNA, trading took me from being a metalhead to a jazz enthusiast. We need all the help we can get to stay calm here. Alright, pretty much 5 points in the money on the trade right now as it sits. Break even on the trade. Need a bit of a push upside here. Again, take profit up at 19,190 and 3/4. ATR still sitting at 42, seeing some undersized bars these last two 2-minute bars. Really just need us to get a little bit higher and take out some of these stops here. That should push me pretty much to target if we can get up there. All right. About 10 points in the money. $15 points in the money. Bit of a pullback. Some bears are stepping ahead of that little, you see this? Some bears are stepping ahead of this little, what they see. Oh, you know, that might be an ascending resistance level. Just need to see a push through again, then take advantage of these stops that some shorts have up here. I know there are some there, maybe good for at least 5-10 points of liquidity, but we got to see that test. There's a pullback, look at that. Coming back in for a potential retest of the 5-minute 20 EMA and the 20 EMA on the 2-minute as well. Break even on the trade now. Back in the green. About 10 points in the money. Again, average on this trade is 19,150. Take profit up toward 19,190. Stop down at 19,110. $20 points in the money. Here's the 2-minute for a better view. All right, now here we are coming into this high. A lot of this trade relies on this high breaking. We'll see. There's the test. Or not yet, but here we are coming into the test. 25 points in the money. Take out some of those stops, use some of that liquidity to push up to 19,190 target. Bit of a pullback, now about 5-10 points in the money. Trade really taking its sweet time, huh? And if you're just joining us, sitting long, average at 19,150. Just need to see a push and take out some of these stops to hit target. Target at 190. About 5-10 points in the money right now. Or about 10 points in the green. Time for the market to make a little bit of a move here. What do you say? Break even now. This trade turning into well longer than my average, by the way, as far as time. My average on trades for the last 2 weeks has been about maybe 2 minutes. I've had a few trades that took maybe 15, 30 seconds, kind of maybe dragged that down to less than 2 minutes. Really, a lot of the trades have been on the same 2-minute bar. Break even on the trade right now. Actually, a little in the green. Some of my follower accounts got better fills. All right, well, here's the test of the 20 EMA on both the 5-minute and the 2-minute. There's the test, sitting about 13, 12 points in the red on the trade right now, at least on the leader. Followers have a little bit better average price. Stopped out at 19,110. We've bet about 25 points in the money on this trade. But I'm looking for 40. Again, the whole idea here is to try to take out some of these stops up top here. We really haven't gotten above that level yet. Back to green on the trade. 5 points in the money. JM, do you ever get out of trades early, or do you always let it hit take profit or stop loss? If the price action is meaningful and it's not an emotional decision, I will cut trades early sometimes, especially in the afternoon. That becomes more common when volatility slows. But this time of day, my decision making happens on the entry, and unless something actually changes, I think a lot of times taking something early is an emotional call. Especially this time of day when volatility is justified. Even though we did slow down a little bit since the entry. So no, this time of day I usually let it work. But that's not to say you won't see me take something early. I'm sure you will. It just needs to actually make sense, not just be in my head something that I'm convincing myself I'm seeing, which most traders are guilty of. All right, 12, 15 points in the money. Again, I really want to see a test above here. Take out some short stops, which would be market buy orders, right? Try to push me up toward 19,190, which is target. All right, 20 points in the money. There we go. Coming in for a test here. 25 points in the money here. Let's see if we can get a breakthrough here and push a few more stops. Currently testing that region. $30 points in the money, looking for 19,190 for target. Really, 19,190.75. Just need 9 more points, 10 more points. Well, we took out most of those stops. Not quite as aggressive. There we are. Out fully there for a winner. All right. So this is now where we currently sit. That trade took longer than my average trade. Kind of turned a little bit more into a, I wouldn't call it a swing trade necessarily, but some might. Intended as a scalp. Ended up taking a little longer than intended, but we're now up about 1691. Let's see what else we can grab here. So ATR now is sitting a little bit below 40. All right, so it's calming down a little bit, but that's okay. Still within range. Again, I like to see an ATR of 30 to 70, at least for the way that I trade. So we're right now in kind of the mid to high 30s, so sitting fine on that range. If you guys haven't yet, please press like on the stream. Helps out tremendously. And I will be back in 2 minutes while you do that. All right, well, we pretty much hit target and came right back down, didn't we? So we were testing the 20 on the 5. See which direction we go here. Exposed, good work. Good work. Listen, gotta be patient, guys. I know days like today, you don't take a trade the first hour of market open. I know it's kind of boring. But, I mean, that's the job. You want to be a trader or not? It's boring until it's not. That's the reality here. Some days you'll have 1 trade or maybe 0 trades. Some days you'll have 15, just the way the market works. At least if you're a day trader, scalper especially. All right, so right now is when Trump, it says greets the president of El Salvador. We'll see if we get any kind of headline coming off of that quote-unquote greeting. And then Fed's Barkin speaks at 11. Fed's Waller at noon. Again, that's really about it as far as news here today. All right, Bears trying to take this thing lower. Let's see if they can create some kind of sequence for me. Yeah, Mark, I've been running a 40-point stop and take profit recently. That will sometimes change. In the afternoon, it becomes more common for me to run that same ratio, and then I'll often take trades off at 1 to 2 reward to risk, just because I find that tends to work better for me in the afternoon as far as the data is concerned. But I find it makes sense in the futures market to make a bigger ask of the market as far as reward is concerned compared to your risk. In the morning when volatility is higher. That doesn't mean it has to be like 10 to 1, okay? It's still 1 to 1 for me, but I will commonly trade negative reward to risk in the afternoon. It just makes more sense in my brain. And then, of course, the win rate's higher, right? Headline from the New York Fed. 1-year inflation expectations rise to 3.58% versus 3.13%. See if these bears can actually make a more decisive move downside. Otherwise, we'll end up hugging this 20 EMA on the 2-minute. Steam, high win rate is nicer than high reward to risk, I find. Listen, especially, I think for a lot of traders that is true, especially for like newer traders. Again, the reality is everyone teaches, oh, you got to risk, you know, as small as you can to make, you know, you want to make 500 risking 100. Okay, so you want a 5 to 1 reward to risk. That's what you're telling me. What the beginners miss is that you're going to win if you have edge 22% of the time. More than likely, the beginners are going to win 17% of the time, something like that. I mean, way to set people up to just quit and hate trading and leave and never come back and say, oh, trading's a scam, trading's bullshit, this and that. Yeah, because you told them to risk $100 to try to make 500. If we want to talk about probability, that's low. Everybody likes to win. Beginners especially want to win. So I think for a lot of beginners, it makes sense to run negative reward risk, especially if they're starting with futures. They will win more often. And even if they don't have edge right away, they'll at least enjoy trading to the point where they can actually work it until they have edge. Half the battle is not hating trading in the first 6 months, right? Really high reward to risk is a really good way to make people hate trading. Okay, here we are getting a bit of a sequence downside, but we're seeing wicks. The bulls are wicking it back up. Okay, we're not really seeing decisive closes near the low of the bar. So watching for that. Chris, experimenting with 0.4 reward to risk at the moment. I love the high win rate coming from a 3-to-1 reward to risk, 40% win rate. Yeah, it's nice. Again, especially early on. How do you win more often? Well, obviously you take good setups. But decreasing the reward to risk, man, it's a good way to do it. Now, obviously, if you lose 2 or 3 in a row, you have to hold it together because they're gonna be bigger losses than your wins. But statistically, that's less probable than if you're going for big 3-to-1, 4-to-1, 5-to-1 reward to risk. Okay, here we are, seeing 45 seconds out from the close of this bear bar. Let's see if we can keep it a bear bar below that previous bar's wick. Here's a 2-minute. Better look with our levels. See if we can get a nice low close. 15 seconds out here from the close of this 2-minute bar. There we go. I will sell the rollover of that bar, so I'm now sitting short. Average price 19,075. Stop loss up at 19,115. Take profit down at 19,035, which is a test, by the way, of this level, which is on purpose. So we are sitting short. 20 points in the money. Yeah, 20 points still in the money. 25 points in the money. Just need to see a downside test of that flat bottom. Ain't over till it's over. Learned that a long time ago, right? All right, target down at 19,035. Need to see about 10 more points. 30 points in the money right now. See if we get a downside test of that bottom wick. Over here, right? I'm talking about. Bulls wicking that bar back upside a little bit. See if the bears can step back in. And still sitting about 10 points in the money. Here's a look of all the charts. We got real close to our take profit, within about 5-10 points of the take profit. Sitting now, it's volatile. 5-10 points in the money. Alright, Bears, step in and give me a flush down to that flat bottom. Those flat bottoms tempt the market. Just need to see that before we see a big old bounce. Five, 10 points in the red now. Bull's attempting a reversal sequence here. Let's see if we can hold him off. Again, stop is up at 19,115. About 15, 10 points in the red. Five points in the green, 10 points in the green. An average price here is, I'm sitting short, 19,075. Take profit done at 19,035. All right, back to 15 points in the money. Just need to see a flush down to the test of that flat bottom. This line here is essentially my take profit level. Just need to see a little test. 15 points in the money. 20 points in the money. All right, 30 points in the money again. Take profit down at 19,035, which is essentially a test of this little flat bottom here. Let's see if we can get a push into that region. I imagine we do. Bull's holding it off for now. Need about 8 more points. All right, there's the rollover bar. 32 points in the money. Little bounce. Come on, Bears, step in, give me a test. There we go. Out there fully, and we are flat for a winner. So you guys see the test of this flat bottom here? That's exactly what we were looking for. A few stops right there. Tends to act like a magnet. The market just can't help itself a lot of times. And then that was in addition, by the way, to a continuation sequence that I shorted. So that's now where we currently sit. We are up 32.02 so far on the day. Let's see if we can grab anything else here. Man, look at that push. It always feels that way, huh? It just kind of takes its time. You get taken out, and then it makes its move. Total fallacy, but I know it always feels that way. I know you guys feel that way too. Steam says they expect low of day to be taken out. Yeah, we'll see. Look at the 5-minute here. There's low of day. We just barely saw a break of 19. We'll see if we can get lower than that. See if the bulls, I'm sorry, if the bears take that out. You guys wouldn't mind, please, all I ask, press like on the stream. I'm serious, if few of you guys do it, I watch it happen, and it makes a noticeable difference, really does, so I appreciate you doing so. If you haven't done so already, I know a lot of you guys do it immediately, which I appreciate. Bear is really trying to take out this low. We'll see if they can take out 19 and push into the intraday low. New York Fed headline, they said the share of households seeing a worse financial situation is the highest since not that long ago though, October of 2023. Obviously that's a more zoomed in perspective on how people are doing. Yeah, I'm curious to see if the bulls here can ward off that low of day. I mean, this has been an aggressive chop. Not chop, right? But like choppy down, up, down. That's not a technical term. That's just me throwing words out. But that's been very aggressive, which is actually very interesting. And by the way, it just goes to show, hey, what did we talk about at the very beginning of the stream, right? Oh, what's the market inertia? Well, we've been seeing a lot of big, wide range days with trends inside of the range. It's exactly what we're seeing today. You want to know what the market inertia is coming into the day. Now that flat bottom's gone, by the way. We pretty much took it out. 2-minute chart? Well, actually, I guess both. 2-minute and 5-minute, this horizontal line here. That was a flat bottom. I know we had some stops. We actually took out basically all the stops below these wicks as well. So we got through, liquidated those long stops. And now really all that's left in terms of stops. Here, for very aggressive shorts, giving it a lot of room, looking for a longer trade duration. Here, for slightly less aggressive shorts, still giving it a lot of room. That's what, 160 points. And down here for longs. The longer this stays, by the way, the more stops develop under here, but it's just 1 bar removed. So right now, a lot of the long stops, again, everyone seems to put them in sucker spots. So you're gonna have a lot of stops down here. Probably good for at least a 15, 20 point push if we end up seeing a break. Oh, Zachary, I'm sorry to hear that. I'm sorry to hear that with the trade copier. I've had a few copier disasters myself. They seem to be about as worked out as I can get them now. At least using the affordable indicators one, which by the way I have zero affiliation with. I just like the tool they built. And I know copiers are an absolute train wreck. But they seem to have fixed a lot of the problems. It's not perfect at all. But if we're trading prop, I need you guys to have the right tools, so I'm testing a bunch of tools. I took a hit myself with a particular copier. They did come back and make it right, but right now affordable indicators is treating me pretty well, so see if the bears can take this lower, take out that low. Chris, still haven't broken the 15-minute orb. I assume that stands for opening range breakout. Yeah, that's gonna be on the 5-minute. Chris, correct me if I'm wrong. Are you looking at this little guy? A little attempt, maybe a 10-point wick downside. Yeah, I'm also watching that. For somebody working full time, do you know any lower maintenance trading strategies? Yeah, so if you can't sit at the screen all day, or you don't want to sit at the screen all day, believe it or not, a lot of people don't want to do this. But if you want to be more active than just like buying the market, which everyone says, oh, just buy the S&P and leave it alone for 40 years. Good advice, of course. However, people conveniently seem to forget about the Japanese stock market and the fact that not all the time our market's going to go up. .com bubble, 2008. You know, that takes years sometimes. For your situation, the way you described it, I'm a big fan of net sell options strategies. Pretty simple. You can run the wheel. You can use spreads, net sell spreads. I'm not a big fan of like debits, but net sell spreads. You know, debits make sense. There's a time and place, but for lower maintenance, you're probably going to want to sit net sell. Or just basic running the wheel strategy. It's relatively low maintenance, 5 minutes a day. You know what you're doing. Maybe be a great way to generate some revenue. Okay, so now on the 2-minute chart, you guys look at that. See if we can get a downside breakthrough there. There's the attempt, a little bit of a break, taking out a few stops. Not going to be a ton of stops there because that's a newer level. There you go, getting a newer low with that recent low. Now I'm watching the 5-minute here. So we're coming at 19,000. That's a tier 1 level, okay? But we also have a lot of long stops right below there, right about that 980 to 990 region. Really 980 to 985. There's going to be stops down there, and it looks like the bears want to see what that's all about. Let's see if they can get down there. Good, if you're just joining us, here is where we currently, well, first of all, here's the test of 19. 2 trades so far on the day. Here's where we currently sit. That's across 7 funded Apex accounts, 2 Take Profit Pros. Take Profit, by the way, is, I think, my favorite deal right now. 30% off, no activation fee. Daily payouts at Take Profit. In your account, same day. It's a beautiful thing. Here's the test of 19. Oh, man, here we go. There's the break in 19. Let's see if we can get a downside break of this low of day. Again, there are some stops down there about 8 points away. That'll be good for at least a 10, 15 point push if you can see a break downside through and trigger some of those stops. Here, I'll show you the 5-minute for a better view. There you go. There's a few stops getting triggered. +15 point move. What did we just say? Those low day stops. Those longs getting stopped out. Those are market sell orders, right? They all trigger. Chain reaction. Disaster here for the intraday longs. That's exactly right, Chris. Let's see if we get a retest. Those are very common. Bear is still taking it lower here. Hey, look at this full chart here, right? What did we talk about at the beginning? The high of these 2 bars sitting right about 18.9, kind of like 18.875 region. That's an area to watch. I think the bears might have their eye on that level if they can keep pushing downside here. Something else we have to consider. You look at the 5-minute chart, right? Does this just turn into a big range and we end up bouncing back and forth all day? That's entirely possible. We've seen a lot of that lately. For full context there. All right, here comes the 10:30 rollover, 35 seconds out. Man, bear's just pushing and pushing and pushing. These are some outsized bars. I imagine we're gonna have some bulls stepping in trying to create some kind of reversal sequence. The question is, can they hold their own? This is an aggressive 5-minute bar. You see that 5-minute bar? Look at this. think the bears are really trying to head down to see that 875, 900 level. Bulls seem to just be stepping out of the way here. These bars are outsized again. I would really love to, but I can't step ahead of those outsized bars on continuation because the bulls eventually are going to attempt to bounce here. It's kind of a gamble on when that occurs. Break-even point on the day will be 135 points downside. Right around 18.8. That break-even point on the Nasdaq has been an area of interest as of late, just a heads up. Now you see these bulls trying to trigger some kind of a reversal sequence. See if they can. Stepping ahead of this thing right now is that's a tough call. Look at the 5-minute again, just for context. We are currently testing kind of the bottom of that second, what could be a second touch point, in kind of a big, wide, descending channel on the entire day. Again, that's the 5-minute chart, upper left of your screen right now. I think that's where these bulls are stepping in at, betting that holds. That's an early bet. That's one of those that's one of those trades that's low probability, high reward to risk. If you want to trade that way, you can make money. Just know that your win rate's going to be a little lower. But the bulls are trying. All right, heading back in for a test of 19,000, 10 points out. That is a tier 1 level. Keep that in mind. Bulls are really trying here. One thing that I am watching, you guys see the close of this bar just inside of the open of that previous bar. That tells a different story than it had we closed up here. I mean, I know it seems like a tiny little minute difference, but it really does tell a story. A lot of people would call that a gravestone doji. That's an attempt at a reversal out of the bears. Yeah, this is just price action. Just price action. We're not reading tarot cards, say it all the time. I just want the most updated, most recent story of, hey, what's the balance of buyers and sellers? What's it telling us? The candles are just a representation of what's going on. All right, I'll tell you what. Currently up 3,200 bucks. I'll be back in 2 minutes. Gotta see what else we can get here. Look at that flush. You kidding me? All right, so I come back and we very much so headed lower. Big push downside. Okay, so now looking at the daily chart, remember that level at 18,875 to 18,9, that's a region to talk about. All right, again, what I'm looking at is right about here. That would essentially be a gap fill. Not that gaps need to fill day one, but they tend to over time, and here we are getting it. Christopher, yeah, rollover. So we're 55 seconds out from the close of this 2-minute bar. It is a shrinking sequence with a larger wick on the middle bar, so a lot is going to depend on this third bar. However, I got to tell you, we're coming right into this flat top on the daily, and we are literally like right there at 875. I mean, the high of this bar was 873. So personally, I don't know if I necessarily want to short at that flat top exactly. And here you are getting some buyers stepping in. If I'm gonna trade continuation, I want as little as possible for the bulls to look at and be like, well, gain confidence from, I should say. And here they are gaining confidence from that flat top. Sellers may be losing a little confidence based on that flat top. So I don't know. That's the way I think about this. It's just real. You know, like, how are people thinking about this? What's going to give the bulls confidence? What's going to give the bears confidence? What's going to disappoint either side? Weigh it out, take the trade, or don't. Alright, so I'm going to go ahead and I like to clean up my charts as soon as I can, so I'm going to delete this. That was a beautiful little flat bottom. Made us some money. Now we're going to see what we get here. Bears are really starting to take over, but the bulls attempting a little reversal sequence here with that with that doji. See if they can hold that. Yeah, Verita, or Verita Vision. So, the continuation thing, it's worked for years. It's real. The whole, like, oh, well, market makers are going to catch on. It's just momentum. It's the balance of buyers and sellers. I don't really think it's going anywhere. Now, talk to me in 40 years and we'll see. But people have been using setups very similar to my continuation setup for decades, since before I was born. It's just a balance of buyers and sellers. I really don't think that it's like a, hey, market makers are going to catch on and it's going to stop working. I think more likely what's the case is it's cyclical. You're going to find some markets that are very range bound, which is why I have both, where continuation doesn't work as well because the market's range bound. The range is tighter on the day. And then I'll scalp reversion. But lately, breakouts have been working very well. You just got to be able to catch on when the market inertia, which by the way is why we talk about that every morning. You just got to be able to catch on to when the inertia shifts from, hey, big trends to little ranges so that you don't give up all your profits during that transition. The earlier you can recognize that, the less expensive that transition is. So if you can recognize, hey, the market's shifting in like 2 or 3 days, you're gonna take home a lot more money than if it takes you 3 weeks to realize that. Like, could you imagine if somebody didn't really catch on to the trend continuation over the last 2 weeks? They'd be giving everything back. So, figure out the inertia, but do what the market tells you. By the way, inertia, I mean like an object in motion stays in motion, like the market tends to repeat what it's been doing until it stops doing so and does something else. So if the market's having huge trend days, you don't want to step in front of that moving train and just try to trade little ranges all day against the trend. You're going to get cut. But market continuing to make new lows here. We may end up testing that break-even point. We're 67 points away. That break-even point on the day has been a huge interest point for the Nasdaq as of late. More than is normal, by the way. Now about 50 points out from that break-even point on the day. That's right above 18.8. $30 points out from the break-even point on the day. We're going to see a test of this. Juan came from minus 2,000 to plus 373 today. Good work. Hopefully you kept a level head through that. Listen, if you can go in the red and keep a level head and just keep taking good trade after good trade after good trade, it's like a superpower. I know it's tough. You lose 2-3 trades in a row to start the day, it changes your mentality a little bit. The less it does, the better off you'll be long term. It just takes taking more trades and seeing that more and more often. Didn't size up for profits, same size, just trading setups. Good. Good. A lot of people will say, oh, I went red and now I'm back to green, but what they did was they tripled their size and kind of got lucky. Don't do that, by the way. Don't chase your losses that way. That's a disaster waiting to happen. Because your mentality is now worse. You're going to take worse setups. Your edge has diminished, if not gone negative, for expected value as far as that, right? So if you can crawl back from red into the green, just trading the same setups, good trade, same trading, or same quantity, same size, it's a hell of a day. Christopher, losing trades doesn't seem to phase you a minute. I think I wish there was some kind of like secret here. The reality here, guys, is that the longer you trade and the more trades you lose, the less you care. Like, it just doesn't matter because you know that you have edge over the mid and longer term. So it's just like part of the game. It's like, is an NFL team ever going to go the entire season without giving up a single point? Probably not. So it's like, whatever, on to the next series. But in the early years, it's tough. You know, it's kind of unfair in a way because, man, we are pushing downside. We're coming into a test 20 points out from that break-even point here on the day for the Nasdaq. It's kind of unfair in a way because in the early days, you're going to have the least amount of emotional control because you have the least practice giving up trades, losing money. Now, they've done studies on humans, obviously, losing money, and it hits a very, very lizard part of your brain. It's extremely hard to control. The best way to control it is to just desensitize yourself to losing, which means trade small in the early years. You're going to take your losses. And then as your edge gets bigger and bigger and you get better and you make money more and more consistently, your confidence grows on top of that. So now the doubt in your head and how much you give into the lizard brain when you lose shrinks because you're desensitized to it. And your confidence skyrockets. So the balance is much better the longer you go. That's the quote unquote secret here, is to trade more, trade longer, and trade smaller. You desensitize yourself to the bad, and your confidence goes through the roof. But when you start, that's all inverted. It's all messed up. It just will be. Trade smaller, trade more screen time, you take more losses, you desensitize yourself to losing. You just stop caring as much eventually because you know, hey, if I trade for a week, if I trade for a month, I'm going to make money because I have an edge. You prove it to yourself over and over and over again. Look at these bears just pushing lower. Okay, we are literally right now at 0%. We are at the break-even point here on the day for Nasdaq. Again, this is a point of interest, at least has been the last 2 weeks, very much so, more than normal. So we'll see what the market decides here, if the bears can just push it through and continue into the red, or if the bulls try to bounce it. They're probably going to try to bounce it. The probability of bouncing directly off 0% is that'd be pretty low. But we'll see if they can manage. They're going to try. Hey Shay, welcome back. How you doing? Man, this 2-minute chart here looks ugly, doesn't it? You can see the bulls are making attempts all the way down. Now, later in the day, if we end up, there's something to think about. If we end up seeing a bounce later in the day here in the afternoon, or even into midday here, we'll see. Because the bulls are trying. Now, if they can pull it off, you're going to want to keep an eye. Here's the 2-minute. Actually, let me show you the 5 minutes a little better. Here's the 5-minute. You're going to want to keep an eye on that 50% retracement right in this region. Okay, assuming we were to like bounce right here, which who knows. But if we were to bounce right here, you want to keep an eye on that 50% retracement, because guess what? You have a whole bunch of longs who are long from up here. Averaging. See this? Bull bar, bull bar, bull bar, bull bar. They're really trying to turn this around. If they're able to do so, guess what? All those bulls who are sitting deep in the red right now, biting their fingernails, averaging down, as soon as they're break even at that 50% retracement on average, right, that range from maybe like 30 to 70% retracement, they start selling at break even. An irresponsible, maybe, way to trade, at least all the time, but a lot of people are going to do that. So keep an eye on that 50% if we do see a bounce. Yes, Steam, it absolutely can. A lot of futures traders, especially a lot of like old heads, like OGs. I see it a lot. Like people today on the internet would say, "Oh, that's such a horrible way to trade." I've heard of many older guys who trade ES, you know, like back when ES was the move. Not to say it's not the move today, by the way. It's just back then ES was like the obvious contract to trade. A lot of these guys dollar cost average. They just add to losers. They have risk structure, like you said, Steam, but they do very well. Trading it in a way that a lot of people would say, oh, you should never trade that way. There's a million ways to make this work. Just make the numbers look good in the end. You just can't take massive blowout losers, which is where risk structure comes into play. Eric, yeah, I see that pattern play out over and over where people average in and then sell at break even. Yes, very, very common pattern when you get big trends like this. Bulls trying to take it back upside here. Let's see if they can. All right, we're a minute 12 out from the close, the rollover of this 2-minute bar. And we're kind of coming in near, not at yet, but near that 20 on the 2. Pay attention here, by the way. You look at this. You're gonna have some bears. Probably draw it right about like that. Don't overthink it. Probably have some bears looking at this, by the way. You might see some selling pressure right here as bears try to short that. Just clean that up. Just know it's there. Bit of a wick back downside on that shrinking third consecutive bull bar. Again, bears trying to short off of that trend line that they're all seeing. Now, we're not seeing any headlines out of Trump, at least not right now. Keep in mind, guys, Fed's Barkin is scheduled to speak here at 11 Central. That's about 60 seconds out. It'll only really matter if we get tariff headlines. But I wouldn't expect a Fed speaker in 2025, maybe 2022. But in 2025, I would not expect a Fed speaker to go, like, save the market entirely right now on their own. They just don't carry that much weight right now. Unless they say the word tariff. Then it causes maybe a minute, 2 minutes of volatility. All right, bears trying to disappoint the bulls here. See if the bears can put in a new intraday low here. With a downside break through 18,800. Again, that's also kind of the break-even point of the day for the Nasdaq. Well, this is where we currently sit. 2 trades so far on the day. So again, that's 7 Apex funded accounts, 2 Take Profit Pros. Take Profit right now, Take Profit Trader that is, 30% off. No activation fee. That no activation fee makes it a hell of a lot cheaper. Make sure you use code BIG, otherwise you don't get that. And Apex currently 50% off with same thing, code BIG. And you can also pass the Apex in 1 day. Take Profit, they make you trade 5 days, but then you get daily payouts. Apex you can pass in 1 single day. You can pass in 1 trade technically if you want. The test that is and be funded tomorrow, but you have to trade for 8 days and, you know, follow the rules to get the payouts. All right, guys, you know what I'm watching. Currently up 3,200 bucks. I'm gonna see if I can grab anything else here on the day, but I hope you guys have a great rest of the day. Go grab some lunch, maybe come back trade the afternoon if the market gives us something. I'll tell you what, subscribe to the channel if you haven't done so yet. I know some of you guys here are newer. Every single morning, I'm live, 8:15 a.m. Central Time. Adjust for your time zone. That's 15 minutes before the bell rings. All right, guys. Appreciate you. Have a good day, and I'll see you tomorrow morning.